What up, Hyperchange? Welcome to another episode. Want to quickly take a look at the coronavirus outbreak, how its recent growth could contribute to an impact in the financial markets. The stock market is down like 2 or 3% as I'm recording this video. I think the entire financial markets are in sort of this weird freak out mode about the potential of the coronavirus. And I have made a video about this. YouTube like demonetizes all videos about the coronavirus, so I'm probably not making money on this, which is a bummer, but I keep thinking about it more and more. And I think this is, I usually try and not comment on macro situations, saying like, I'm just going to focus on the companies I'm analyzing. I don't want to get caught up in trying to predict, when the stock market's going to crash. Nobody ever knows that. But now with this coronavirus thing, there's a weird, I don't know, I feel like this time's different, but you should never say that, but I'm saying that this time because I see this clear economic, just massive like hit to the economy that's potentially pending in every single country around the world, and I kind of wanted to break that down. But anyway, let's briefly run into the stats here. So as I'm recording this, 101,500 cases, tragic, 3,400 deaths, 56,000 people recovered. I'm using this worldmeters.info website to see this. They have these really cool charts of the cases. But as you can see, what's got me worried, there was a big jump here when I think China changed their methodology for testing, but there's been a re-acceleration. We're talking thousands of new cases per day, and there's been an acceleration in the amount of new cases that are popping up, as well as total deaths. So I think this is really worrisome, and it feels like the cat's out of the bag, and we're not, people in some of my family is from Seattle, and Seattle, the city is like slowly shutting down. Like nobody's going to work anymore. Everybody's working from home. Like companies are literally ordering that. There's not as much in the stores. Nobody's going out to restaurants. And so this is just in Seattle right now for a small period of time. But if this outbreak continues, more and more cases happen, more and more people can't go outside. I'm worried that this sort of like work ban thing could spread and sort of become commonplace, and everyone just gets locked in their homes for, is it a month? Is it 2 months? I don't know. Basically, the self-quarantine thing, I'm getting more and more worried is a realistic situation. And if that occurs, we're talking about a huge real impact, material impact to the global economy, and especially the US or wherever this happens. So, if people aren't going out to restaurants, they're not spending money. Every, retail store, restaurant, Chipotle, any Whole Foods, like Nike, Under Armour, any of these stores where people go to, business and foot traffic is going to totally die down, and that's going to really hurt business. And I think in a material way. You also talk about the industry-related supply chain shutdowns are really hard to quantify. I mean, Apple already came out with a warning saying they can't build as many iPhones as they want because things shut down in China, and because of that problem, they're going to miss their earnings. And so what I'm all getting to is this has a real economic impact. And I couldn't find a good website for this. If you have one, please let me know in the comments below. But trying to figure out the consensus earnings estimates for the S&P 500, how those are trending over time, because I think these are about to fall off a cliff. This is from this guy called Yardini, who I think is a Yale professor, but he puts out these awesome charts. It's a little bit delayed, but as you can see here, this is the S&P consensus operating income per share estimates for the S&P 500, and basically what analysts think the earnings are going to be for the entire broader market. As you can see, for 2019, 163 dollars per share, I guess, for the S&P was their earnings. They were projecting 175.68 in February 20th. Then that dropped down about 30 cents to 175.39 on the 27th. Well, what do I think is going to happen? This is still like a week or two old. As these new estimates come out, as analysts figure out what's happening, more and more companies report Q1 earnings, talk about how this has impacted their business, how this could impact their business. We're going to see these estimates for the income of the profitability of the largest companies in the world do this. And so the entire way the stock market works, at least my theory, is that it's trading on a ratio of earnings to the PE ratio. So the S&P right now, it's doing like 160 earnings or $163 of earnings in 2019. That puts us at a 2019 price operating income ratio of about 19.4, which is a little bit pricey, but when you consider that you can't get yield anywhere, the loose rule of thumb that I like to think of when trying to value the stock market and see how fairly valued it is, is trying to keep it in check relative to the 10-year bond. So if the 10-year bond is yielding about 3%, that's like you could compare that to the earnings yield of the S&P. So if you had a PE of 33, that would be 1 over 33, a 3% earnings yield. And so 19.4 implies like a 4 to 5% earnings yield for the S&P 500. Yet the 10-year bond right now is below 1%. So I think when you're like, oh, where would I go to get my money? The 19 times earnings on the S&P 500 is still a way better yield. You're getting 4 to 5% earnings-wise, value-wise, in theory, versus less than 1% in U.S. Treasury. So I think looking at that sort of balancing interest rate equation, it doesn't look like the stock market's overvalued. But what would happen if earnings plummet? That PE ratio skyrockets. And so that is the fear factor. And then growth stalls, everybody starts panicking and freaking out. And this is how you have market crashes. And so I think what's about to happen, or what could happen, and it's freaking me out, which is why I didn't buy Square stock, which I'm working on a video about for Cash App, but just because I don't want to buy anything right now, because I'm worried that, like, I'm not selling any of my stocks either, but I'm just like, I don't know, it's scary what's happening in Seattle, and I could easily see this spreading to everywhere in the US, telling everybody to stay home. Then we have a several month-long real impact to GDP and earnings, and then the market is going to have months to try and process and figure that out and could totally get spooked. And yeah, I'm worried that could lead to a market crash. So anyway, I don't know, just kind of food for thought here, but it's sort of been scaring me more and more to watch this re-acceleration of cases of the coronavirus, because now I think the increasing, the likelihood of this actually spilling over and having a big effect on the economy is just becoming more and more likely by the day. Anyway, this is Hyperchange. Let me know what you think in the comments below. Huge shout out to the Patreon supporters, producers, funding the channel. See you guys next time. Peace.